Hey everyone, thanks for stopping by my channel. Hope you're all doing well. In today's video, I'm going to be talking about how my new holding BLOX is doing in my Roth IRA. In this video, I'll briefly talk about how it's performed in May and why I think BLOX is a safer way to earn crypto income. Now, before we move on, just a quick disclaimer, this video is for entertainment purposes only. It is not intended as financial advice. Please consult with a qualified financial advisor before making any investment decisions. Okay, so jumping into my Roth IRA and my Schwab account, you can see that more or less the portfolio value is close to where it started at the beginning of the year. And the last 2 months, April and May, were pretty good months for the portfolio. Now, if we look at the portfolio allocation, you can see that SCHB is my biggest holding at close to 50%. And I do have income ETFs, HOOW, and blocks. And I do have a bit of cash. And right now, it's saved in my position in SGov. Although it's not always there because sometimes I do use the cash to make short swing trades or to buy some dips on SCHB. Okay, so jumping into blocks. Now, this is not a deep dive video, and I'm not trying to persuade anyone to buy this blocks income ETF. I'm just showing how it's been doing or performing in the last few weeks in my Roth IRA account. Now, if we look at the top 10 holdings, and maybe this is one reason why I think blocks is better than other crypto ETFs, is it doesn't have only crypto exposure. I mean, if we look at its biggest holdings, sure, it has FGXX and HODL, but it also has big names like NVIDIA and TSM. And right now, the market has very low sentiment in fintech and crypto space. So having sort of non-directly related crypto space and fintech names, I think is actually helpful for this kind of portfolio. Now, it does have some exposure to Coinbase and Robinhood, so I also like that. And maybe at some point, I will get rid of my HOOW position and just go all in into blocks. Okay, so looking at the portfolio performance against other holdings, you can see that HOOW and COIW are also income ETFs that have a lot of exposure to the crypto space. But if we look at the comparison, you can see that blocks just blows them out of the water. I mean, in purple, it's the only fund that has a total positive return close to 21%, and the other ones are underwater. Now, sure, in a bull market where sentiment is high in the crypto space, HOW is actually a pretty good space to park your money in. But in down markets or when there's very low sentiment in the crypto space, then it's probably not a good area to park your cash. Now, throughout the last few months, you can see that purple doesn't go too high, it doesn't go too low, kind of just stays in the middle range, and it's just a consistent performer. So I really like blocks for this, and I think there might be some better news coming up in the next few weeks. I mean, I heard that BMNR got a bid to join the preliminary list and might join the Russell 1000 sometime in June. Now, this is not a for sure conclusion. This is just some speculation that it might join the 1000. So if it does, I think BMNR will have a good impact on the crypto space in general. But we'll see what happens in June. Okay, so looking at in a little bit more in detail, you can see that blocks is the only one in green. And it's not just compared to HOW and COIW. If we look at YBTC and even BCI from NEOS, you can see that blocks is still outperforming these other two funds. So again, I think blocks is a pretty good fund to have if you want some exposure to the crypto space. Now, this is not a portfolio update video. In this video, I'll just really focus on blocks. My portfolio update video will be coming out in the next few weeks. Okay, so looking at blocks, you can see that so far I've received a total of about $47.50 in distributions. It's up about 6% in capital gain. I mean, last week it was I think around 10 to 12%. But there was a little bit of bad news for the crypto space, so it's a little bit down. But overall, up 7.5%. I can't complain about that. Now, if you look at the distributions, and one thing that I like about the crypto space in terms of blocks is it's really trying to protect the net asset value. And I think the fund managers are doing a really good job at making that a priority. I mean, if you look at the distributions, you can see that it paid 11 cents on May 4th and 12 cents on May 11th. So, pretty consistent distributions. But if we look at HOOW, 26 cents per share on May 5th and 12 cents per share on May 12th. So this goes all over the place. And I think sometimes that might actually affect the net asset value. So again, I think blocks is just more consistent when it comes to the crypto space. Okay, so that was just a quick video on blocks and just a quick recap. I like blocks because it isn't as volatile as other crypto ETFs because it doesn't have only pure play crypto exposure. It does have more stable NAV. I mean, the consistent distributions are around 33%. And I think anytime you try to go over 40 or 50% in distributions, there's always some kind of net asset value erosion or NAV decay. Now, because it has exposure to indirect crypto plays, I think it kind of helps keep it balanced or at least sort of within striking distance and not underperforming other funds. And this is not the most tax efficient fund. So I think stuff like blocks is actually better in a Roth IRA. I mean, everything's better in Roth IRA, really. But I think there's an increase in return because I don't have to pay taxes on the blocks distribution. So that's just a quick recap of blocks. Okay, so that was a quick video on how blocks is doing my Roth IRA. Hope you got some value out of it. If you like information about income ETFs, small account portfolios, and Roth IRA, please like and subscribe to this channel. And you might also like these two videos. Thanks again for watching. Take care and see you in the next video. Peace.